Hey everyone, this is Robert Weinberg, your mortgage advisor and financial coach. In this video, I want to go into depth on the underwriting process and what it takes to get a full loan approval. So typically, you'll have met with your mortgage advisor either over the phone or in person to start your loan application. And they'll have gathered some information from you about your income, your assets, your employment, your address history, and other things that are required to complete the loan application. So what it takes to actually get a full approval on your loan is to validate the information that you provided to them. By validating that, we mean you're going to need to provide some documentation and information to back up what you already provided. And then in turn, your mortgage processor or mortgage advisor is going to take that documentation and submit it to underwriting. The underwriter's job is to verify the information and compare the documentation that you provided to the original loan application and make any changes or adjustments that are needed based on what you originally provided. They're going to come back with something called a conditional loan approval. And what that means is they're going to give you and say, okay, we are going to approve this loan subject to these conditions being fulfilled. So all conditions are requests for additional information or documentation. The most common ones I see would be explanation of a specific deposit on your bank statement, a question about a previous address or an inquiry on your credit, maybe an additional pay stub or additional bank statement or retirement statement. Those are really the most common, but conditions could be any and everything that the underwriter may need to finish the validation of your loan application and issue that full loan approval. So how do we clear conditions? Well, what's going to happen is the underwriter is going to send your mortgage processor or loan originator a list of documents and questions that they have to finish the full loan approval. In turn, they will then communicate with you with the additional information or documentation that's needed. They'll tell you exactly what you need to give them. What you want to do is you want to then get back in contact and be very responsive to the request for the additional info or documentation, and then they will gather that from you and then submit that back to the underwriter for them to review. Now, don't be surprised if you may be asked for additional documentation more than one time, because sometimes when the underwriters have conditions and you supply a document, when they review that document, it may bring up another question or concern that needs to be verified or validated before they can fully approve your loan. So a question I get often is, can I be rejected for the loan after I've been approved? And the answer is yes, but it doesn't happen very often. I know in my office, less than 1% of the loan applications that get approved actually do get rejected after the fact. The only reason that I've seen for that to happen would be a material change in the status of your finances. So that may be something that you said on your loan application that turned out not to be true. For example, if you said you had $10,000 in a certain bank account, and then when we verify it, you only have $2,000 in that bank account, that would be the type of situation that could cause a loan from going from approved to rejected. So if you just try to be as accurate as possible during the loan application process, if you don't know something or you're unsure about something, be upfront and honest with your loan originator so they can make sure to validate that early on in the process to be sure that you don't have a rejection scenario on your hands. And the main thing that I want to talk to you about in the do's and don'ts would be you don't want to apply for any additional credit once your loan is in process. No new store cards or 10% discounts at Banana Republic or Express. You don't want to make any inquiries on your credit at all. You don't want to charge your credit cards up significantly, and you don't want to open any new accounts, because what's going to happen is about a week to 10 days before you're closing, the underwriter is going to do a final quality control credit check. And all they do during that check is just check to see if you have any new accounts open, if you have charged up any significant balances on your credit lines or whatnot. And they want to see what inquiries you've done. Have you done any new inquiries for credit? So as long as you don't do any new accounts, charge significant balances, or new inquiries on your credit, you shouldn't have any issues. And that's the big don't that I would tell you not to do during the underwriting process that could cause last-minute questions or concerns from the underwriter. So I hope that this helps, and I really do appreciate you watching. If you would go ahead and click the subscribe button and the bell if you're on YouTube to get notified when I put out more of these videos. You can hashtag Rob Weinberg Lending Team, and check us out on Facebook, Instagram, Twitter, or LinkedIn, and also our YouTube channel, Rob Weinberg Mortgage Advisor, NMLS 80786. Thanks again for watching, and we'll talk to you soon.